Well, hello. Early morning start. Friday the 13th. Ooh. Let's hope the charts aren't too scary, because we're back on the DAX rotation. And a warm welcome to one and all, and a special warm welcome to the, hold on, I was going to say the naked lady, I was actually right. She's got no clothes on.
Oh, 7 o'clock.
I've got my coffee. I definitely need my coffee. And for those of you who haven't been here before, my name is Langers, and that is the love of my life, Wingy. And it's early morning. It's just after 7:15 in the morning. Getting another coffee in because I definitely need it for this series of videos. And if you haven't seen the series of videos, it's basically one trade before you go to work to build up a nest egg. And that's kind of what we're doing. It's had its moments, and like most things, the live test is a lot different to the back test. You see, when you back test something, you're taking it from a closed candle. Perfect world, if you like. When you're in a live test, your emotions take over. You might get in a little bit early. You might get out a little bit late. All of that sort of thing. And that's what you're watching unfold. So I'm going to keep it quite punchy. Because this is just a vlog of the journey and how we get there. So let me flick the screens on. And we'll have a little look. Now it's the German DAX. If I pull that across, you should be able to see the date and time. Friday the 13th, 7:15 in the morning. And how have we been doing? Well, at the minute the equity curve is moving up reasonably well. And it looks good. But don't be fooled by the figures. We came out of the gate incredibly well, didn't lose a trade, not one. But I genuinely believe that was a flash in the pan. And that's the other part of trading. Sometimes you do just get a good run. And you don't actually know why. You just happen to have been on the crest of the wave. And that wave hit the beach on the next month because it knocked us senseless. We lost quite a bit of money. We ended the month quite well. But within the month, we did get smashed to pieces. So I had to strip everything out and almost started again. Kept a couple of rules in, took nearly all the rules out. And then we're back to this month, which is out the gate okay. So I'm quite pleased. What we're looking at today is we're looking at 86p a position because we're compounding, we're growing the position as we go. We are going to be looking to achieve more than £8.92 to keep us on track, because the idea is I'm trying to grow this up certainly to £1,000. I put an initial target in of 2,000 for across a year, 12 months. But if I can get it to 1,000 before Christmas, I'll be very happy. And that's what we're looking at. Now this morning, as you can see, if I just push this out slightly, you kind of see the trading arena that's in. We're in all-time highs with this at the moment, so it's quite difficult to work out. We're going to be looking at a 5-minute chart. And as you can see, it's kind of range bound. So what I'm expecting this is, over the next sort of 20 minutes, half an hour, is for it to push up, and then we're going to go short. Okay, so today is going to be short, but I'm expecting the market to move up a little bit first. Probably around this area up here. You know, the tops of here. In other words, pushing to the top of the range and then roll over to come down. And the criteria that's in place seems to confirm that. So what I'll do, I'll pause the camera now, and I'll come back at 7 o'clock onwards, just rather than listen to me bang on a bit, and then I'll run the trade out. And if you haven't seen it before, the reason why it's traded after 7 and not before 7, it's not to do with strategy or anything like that, because a few people think that's what it might be. It's not. It's to do with costs. On all of my trades, whether I'm swing trading, my normal day trading that you see, I kind of work in time segments, and those time segments are at the top of each thing. So if I'm on a 15-minute chart, they'll be at the top of the 15 minutes. If I'm looking at an hourly chart, it's the top of the hour sort of thing. And I also bear in mind the points at when the spreads move. And for the DAX, at the moment, before 7 o'clock, the spread is very wide, which is a nightmare because it can take you in too early and it costs too much, basically. But at 7 o'clock, everything tightens up, and then it's feasible to start your trade. And the idea is to get into the trade sometime between 7 and 9 o'clock in the morning. In other words, before you go to work. So that's the game plan. So I'll see you about 7 o'clock. Okay, guys. It's 1 minute to 7. And let's have a look, see what's going on. Yes, I'm having a proper old sing-song this morning. A bit of Mouth and McNeil. Wake you up on a morning. Right, okay. We are 7 o'clock. We are short. So let's have a look. See where we are. So as suspected, the price pushed up. And it is now dropping. Okay. Oh, there we are. It's taking us into the order. So I'll just drop that up there. Got a reasonable target this morning. And that's it. So I'm going to enjoy my coffee. I'm going to have a bit of a sing-song to Mouth and McNeil. I've got a few questions to answer on the message board from the Discord. And see you on the other side. Okay, guys, it's closing on at past 8. Everything looks pretty much well. Going to head off down into the office, just let this play out, see if it hits target the same as it did yesterday, and hopefully it'll come to a good one later on. What I try to do when I go to the office is not tinker with this. I leave it alone. I got my stops in place, I have my targets in place, and I just let it get on with it. And then when I come home tonight, I'll switch it on and I'll see what the result is. And the reason why I do that is because it's meant to be a trade around work. But I also have my other job to do, which is trading the prop firm and trading my own funds. So I have plenty to do while this is working itself out. And for those that follow me, if you bear with me, I'll give you a quick little snapshot into what the other side of what I do is, if you haven't seen it before. It's this. I trade a prop fund. It's a £50,000 fund this month. Made 1,400 for myself, and we're only halfway through the month up to now. And that is my equity curve, which is doing pretty well. I'm quite pleased with it. That's because I'm holding a 90% win rate. Now, I know a lot of people bang on about win rates and sort of saying that it's meant to be about 50%. I don't believe that. I think if you can read a chart, that's your job. If you're sort of very low win rate, you're not reading a chart, you're gambling. But that's my personal take. And when you look at things like this, what you need to take into account is the profit factor. Now, profit factor is whether or not you're making money or losing money, and your expectancy is to make money. Anything over 1 is deemed profitable. There you are. So it shows you there, it highlights profit factor. Anything greater than 1 is represented as profitable. I'm at 6.4. All right. And this is what I do during the day. I work on this and I work on my own funds. So there you go. Everything's looking good. This is now starting to recede, just like what I thought. It's gone up a little past where I thought it might. I had an inkling it would come to brush the tops of here, which it kind of has. It's just spiked above and now it's moving down. But my overall view of this is to the downside throughout this morning. Okay, so I'll see you when I get home.
Well, we're waiting.
Okay guys, back home, 10 to 6, and it's a bit like it was the other day where kind of squeezed up and didn't do anything. So what I'm going to do is I'm just going to let it run. It has pushed up a reasonable amount. I mean, it went up to about 50 quid at one point, looking at this. But it's intolerance, and it's something I expect on the DAX anyway. As I said this morning, I do anticipate this going up. It's squeezed up a bit higher than I thought, but that's trading. Just because what you think is going to happen doesn't mean to say that is what's going to happen. And the markets will, well, they'll show you that very quickly. Which is why I believe in wide stops and not tight stops. To me, tight stops are death by 1,000 cuts. And you can argue with me that you're blue in the face. I ain't changing the way that I do things. It's just the way I am. I do have a reasonable risk tolerance. It's always in relation to the account. But I prefer to manage a trade and see what the process is, then go, oh, I've got 10 pips stop. Good luck. I bet you've got a win rate that's next to nothing, and you don't make much money either. You have to let the trades play out. And that's kind of what I'm doing here. So it's a case of suck it and see. The pressure is downwards. Now, if it can get to sort of back brushing this area tonight and I catch it before the markets close at 9 o'clock, I'll just kill it off for the weekend. However, if it just stays stagnant the way it has been pretty much all afternoon, to be honest, for the last 3 hours, because you can kind of see it there, it's just flattened out. If it just stays around there, I'll just see what happens on Sunday night through to Monday morning. Just part and parcel of what we do. Okay. So there we are. A bit of an anticlimax to the week. I would like to have finished it flat, but we've still got money in the bank. We're still moving forward, and this ain't dead in the water yet, just a little bit tough. So there we go. Pick this up on Monday and we'll continue this journey. So trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all on the next one.